I'm Greg Hunter. Welcome to USAWatchdog.com. A guest we've had on as a regular and haven't had him on regularly for a while. He's taken a couple of month hiatus and decided to have a little coming out party and come on USAWatchdog.com and talk and share some of his thoughts with us. And he has some huge thoughts to share with us. It's Bill Holter at JSMindset.com. Him and Jim Sinclair run the thing over there. Bill is a 20-year veteran with brokerage experience. He also is a gold broker. Bill, thanks for joining us today on USAWatchdog.com.
Thanks for having me back, Greg.
Well, they had on Tuesday, they dropped $1.5 billion on the gold market. It's almost comical. I'm like, they're talking about quantitative easing and cutting rates by 0.5 point. I kid you not, officially by the Trump administration. And all of a sudden, people want to start selling their gold. What gives, Bill?
Well, it's not all of a sudden people want to start selling their gold. All of a sudden, somebody or some entity dumped 11,000 COMEX contracts. That's 1.1 million ounces. It's almost $1.5 billion, and they did it in about 2 minutes. So gold is at roughly the 100-day moving average, and they tried, to push it through it. They did. But if you go back just a couple years, and you go back 4 or 5 years, had 1.1 million ounces of gold been sold, you would have seen $20 down in a heartbeat. And I think this gold was trading down $3 or $4, and they knocked it down to 10 or 11. So they got about a $6 or $7 movement for their effort, which is far less than what it used to be.
They're not there. I mean, I'm being facetious. I mean, people shouldn't be selling their gold. People ought to be frightened out of their mind with the weak economy and cutting interest rates. And Trump wants to be reelected. I understand that, and I hope one of these evil, Luciferian, raise your taxes, kill babies outside the womb, Democrats is going to get elected. I mean, they're nuts. They're communists. They're Marxist. They are. They're Marxist. I'm not making that up, and I don't think I'm over the top on that. But you're saying, why are they doing this? I mean, obviously people are they're selling what they don't have. They're counterfeiting the gold. They're selling what they don't have. What's the idea here? Why are they trying to drive the price of gold? Now, obviously it's a manipulation. There's not the real gold hitting the market. Why are they doing it?
Well, we've talked about this over the years. Basically, it's so that people believe gold is bad, the dollar is good. It's basically to support the dollar and also thus support the treasury market. This game has gone on for years and years, going back to the London gold pool in 1960, the late 1960s. So this is nothing new. I would mention to you, Greg, this has to have some type of official backing to it. I mean, it couldn't be done if they weren't given a pass. And the case could be made that, the plunge protection team is part of it, and who basically oversees the plunge protection team but the Treasury Secretary and the President. So, this would not be going on if there was true rule of law, if there was true digging into what's going on behind the scenes in markets, and thus we don't have free markets. There are no markets today. All markets are rigged.
Yeah, I mean, you were just kind of playing now traders are not playing the fundamentals. Fundamentals be damned, as some people say, that they're just playing the intervention and the manipulation. And here we have again where the raw facts, the fundamentals say, oh my gosh, you want to start cutting interest rates 0.5 point and go back to quantitative easing? Gold should be taking a moonshot, but nope.
Right, and markets literally should be panicking that we're moving toward hyperinflation. But that's, like I said, all markets are locked down. Markets are locked down by derivatives. Derivatives are used to price and bully markets to where officially, they want them to be. In other words, prop the stock market up. Think about this. I wrote an article for subscribers yesterday and linked it to an article last week on the same topic of derivatives. Uh, in 2008, there was 1.4 quadrillion worth of derivatives. How is it possible that derivatives are larger than the system as a whole? And the answer to that basically is because derivatives have become the system, derivatives are what price the system. And remember, you're putting up 1 cent to 1 cent or less to control $1. So it's easy to bull or force markets to be priced where you want them to be. And going one step further, think about the U.S. So we've got a 10-year rate at what, 2.5% or thereabouts.
Yeah, 2.4
In,
something.
in what world, in what real world could a nation that arguably was on its way to Banana Republic land 10 years ago, back in 2008, 2009, in what world could they double the debt and have basically all financial ratios deteriorate and rates collapse? Only in a world where derivatives price assets. And that's pricing the bond market to create a 10-year at 2.5%.
I mean, you look at the 1 month money, and 1 month money is like at 2.4 1 month. And if you look at 2 year money, it's a little bit less than 1 month money. And if you look at all the way out to 10 year, it's we're talking a few basis points. I mean, between 1 month and 10 year Treasury money.
Right.
Is that what you're talking about? That's wackadoodle cuckoo time?
Well, what I was talking about just a moment ago was in what world could a bankrupt entity see their interest rates go down? That's what I was getting at. Now, what you're talking about is the yield curve itself, and the yield curve, we have been inverted, not inverted. We've gone back and forth over the last 3, 4, 5 months. Inversion, not inversion, inversion, not inversion. The yield curve is basically flat across the board, and an inverted yield curve is a signal that we're going to have a recession. There have been recessions in the past where we did not have an inverted yield curve, but anytime we've had an inverted yield curve, 100% of the time, a recession has followed.
Well, it's been inverted. I mean, right now they work. Of course, it's you know what they're doing. I mean, the 1 month is a 2.42, the 10 year
Right.
is a 2.55. As we do this interview, I mean, yeah, it was inverted. I mean, the 1 month was higher than the 10 year. I
Right.
mean, or even, I mean, it's whacked out. I look at it. I don't even look at the futures anymore. It's like, it's futures. Please stop. The gold price went down today. Yeah, 1 point, and nobody says anything on the financial channels. I mean, what a fraud that journalism is. So somebody makes a $1.5 billion move. The cost of, I don't know, VR. The cost of Lee jeans. Somebody bought dumped that on just a one trade to lose money, and nobody says a word.
Well, Greg,
What a fraud CNBC is and Fox Business is.
well, across the board. But the hilarious thing is, you're talking about $1.5 billion. COMEX doesn't even have a small fraction of $1.5 billion worth of gold to deliver. That's the first thing. And the second thing is, if you don't think, and we don't even have to talk about sovereigns, you don't even have to talk about China or Russia or a country. You could talk about individuals that could buy $1.5 billion worth of COMEX contracts, demand delivery, and blow the system up. Because that amount of gold cannot be delivered.
I mean, Ray Dalio does what, $2 billion? Did you see the fraud of Ray Dalio? So we have to redo the system. Really? And you do a keyword search and you look for bankruptcy, and that's not in his thing. So rich people can't take losses. I mean, that's what should have happened in 2008. Rich people should have taken losses. Warren Buffett is a buffoon idiot who required a government bailout for all the stupid things he did. There you go. Here, take that. How about that, CNBC? Warren, but I pay more taxes than my secretary. Yeah, your secretary doesn't get multi-trillion-dollar bailouts for stupid moves you make with, that with Goldman Sachs would have gone anyway.
What you talked about socialism and Marxism to begin with,
Yep.
and basically that is socialism. That's socialism for the elite,
Oh,
the
yeah.
bailouts.
Yeah. They didn't want to
So
take
I mean,
losses.
we have had a socialistic system at the top ever since, well, before 2008, but it was out in the open for anybody with half a brain to see. We live in a socialist system for the 0.1 percenters.
That's why Jamie Dimon and all the people doing God's work were freaking out. They were going to have to take losses.
Right.
And we can't do that. We got to flop them off on everybody else.
Well, Greg, they can't do that because they couldn't come up with the capital to make good on the losses. I mean, the entire system would have come down because there were many entities back in 2008, 2009 that had they not been bailed out, they would have been gone. Think about it. What would the world look like if Citigroup was gone? Merrill Lynch went down. General Motors went down. Wachovia went down. I mean, go on down the list. AIG.
General Electric.
Yeah, it would. Well, and
American Express. Wells Fargo.
Right.
You could just get the list of Warren Buffett's companies out of Berkshire, really.
Yeah. Yeah, you're right.
You could.
Yeah.
Which brings us to China. So China and the rest of the world knows that the Fed and the ESF and whoever did this crazy stuff. It's not fixed. They blew up the derivatives. The derivatives are way higher than what anybody would ever admit to. I mean, I think Egon von Greer said the total debt in the world is, I don't know, 2 quadrillion, 2,000 trillion. I mean, anyway, China, and they know this. So what's going on with China? You wrote in one of your articles, and they made some news here. You said that you estimate, as your analysis shows, you think that China, they say that there's 20,000 tons. I've heard that number a lot. China has 20,000 tons. You say could be 40,000 tons. Explain that.
No. China says they have like 1,800 tons.
Oh, 1,800.
Yeah.
Then some people think
on the back of a napkin, I can show you that they've got 20,000 tons. And in that article that I wrote, we had a reader write in saying, 40,000 tons is not an outlandish number, and I have to agree with that.
Wow. But they have at least 20,000 tons to our.
I would think
reportedly so. 8,000 tons.
Yeah, and Greg, we've not had an audit since the mid-1950s.
Oh, Bill, yes, we did. Steve Mnuchin went to the Treasury and tweeted out that the gold was fair. Hey, no worries.
He didn't say that. He came out and he said, "Gold is good."
Oh.
That's what he said.
Okay, yeah, whatever. I mean, this is like a comedy show.
Gold is good, but that doesn't tell us that the gold we're supposed to have is there. And if we haven't had an audit since the 1950s, just a one-word question: why? What are they hiding? They're hiding the fact that the gold is gone.
If you wrote a book, and
if there is gold there, Greg, whatever gold is there has probably been leased out.
Well, the Italians are, everybody talks about gold being this relic, and then, as soon as, some country like Libya goes down, poof, their gold's gone. Reportedly, the United States took 40 to 50 tons out of Syria recently. The Italians have said, hey, that gold belongs to Italy. Oh, my gosh, wait till they find out Mario Draghi on his way out the door leased it all out so they can become part of the EU. I mean, all of a sudden gold is in demand, it seems like, but yet it's being crushed in the COMEX, in the LBMA.
Right. Well, you're told that, gold is a barbarous relic. And on the other hand, when a country's invaded, what's the first thing they take?
Got it.
They don't go to the central bank and start taking banknotes and the plates that they use to print them. They take the gold.
Good point.
And this thing with Italy, if gold was no big deal, then why is there such a big beef between Italy and the EU? Why is the EU so upset that Italy wants to claim its gold, which is just a barbarous relic, for its citizens?
What do you think? Why do you
Well,
think?
you just mentioned the gold could be leased out. That's a very good possibility. Uh, but central bankers understand. Alan Greenspan understands. Gold is the foundation to everything, and you got to understand. And I wrote this in the article, not this last article, but the one before. The article was titled "China's Weight." Basically, why is a pound named a pound? Why is the lira a lira? Why is the peso a peso or the Spanish peseta? Because those denote weight, as in, how much something weighs. All of today's fiat currencies, their lineage goes all the way back to being a derivative of gold. Gold is the money. The paper currencies were derivatives of gold. In other words, they were receipts, if you will. You could go into a bank and exchange it for gold. And of course, that changed back in 1971, and earlier in it changed in the United States in 1934. Individuals couldn't get gold, but then it changed for nations when they were presenting dollar bills for gold. That was shut down in 1971. But what I'm getting at is these fiat currencies that have names of weights, they have absolutely zero connection to gold now, when originally they were a direct receipt to gold reserves.
And where do you think this is going? Where do you think China's end game is going? I mean, China is the big player, the big buyer. I heard this from all multiple sources. All the stuff is leaving the LBMA. It's being, reminted in Switzerland and kilo bars and sent to China.
Right.
We have all this. Evidently the U.S. is also trying to get some gold. Syria, recently they, helicoptered out, 40 or 50 tons reportedly. Where are we going here? Also Basel III, they just allowed 100% back 100% asset
Right.
claim of on gold, not 50% like it was. What's the world telling us? Where's this going?
Well, first of all, you're talking about the U.S. helicoptering gold out. That's not to accumulate gold. That gold is being sold on the market to try to suppress the price. China, Russia, India, uh, and other nations have been and are accumulating gold because they understand it is the only money on the planet, gold and silver, that is no one else's liability. And they understand that the entire system is based on debt. The entire system is a liability. So in essence, what they're doing is they're getting some of their reserves out of the system and into real money, which is no one else's liability.
It doesn't Trump. I mean, Trump is a smart guy. He must knows this. He surely knows this. I can't believe that he's taken all of his gold and they could use a derivative contract. Why would they sell the real stuff if they could just dump paper like they did on Tuesday? If they could just dump paper onto the market, and they're doing the same thing to silver. It's under what, $15.
Well, yeah, I'm sure President Trump, he does fully understand gold. As a matter of fact, he brought Judy Shelton on as an advisor, and she definitely understands gold. Uh, but look at the condition that he inherited. I mean, really, what does he do? Does he put a tweet out and just blow up the entire system? I, the things that he was saying as a candidate, the stock market's a bubble. Uh, Going along with that, but I mean, really, what does he do? Does he call bullshit on the whole thing and blow up the system
No, no, no. He buys
and
time.
everything come down? In my opinion, and I've said this. First off, I want to say that I'm disappointed that it's taken this long, And that doesn't mean that we're even gonna get to the point. But if we do not see high level, and I mean the highest levels of arrests come down the pike in the next few months, this country has no rule of law.
Yeah, my sources say that's coming. I mean, he was under attack for 2 years. They tried to kick him out of office. I mean, that's
Right.
in a phony scam, treasonous scam is what it is, and yet, and the mainstream media is part of it. They participated in it. It was talked about in the.
But what I'm getting at, Greg, is if the stock market and financial markets were to completely fall apart and crater because you saw Bill and Hillary getting perp walked, you saw Comey perp walked, you saw Obama perp walked. If the markets completely collapsed because of that, then basically he can wash his hands and say, "Hey, I didn't do it."
So I don't think so, though. I think the rest of the world, because they look at CNN and go, "You're crazy. Trump's doing great." I get this from Martin Armstrong. Martin Armstrong says, "I travel all over the world. The world's like, what are they doing?" I mean, everybody in the world thinks he's doing a great job. The rest of the world, but I don't think that. I think they'd look at it. Maybe the markets would go the other way. They'd go up. They'd say, "Oh my gosh, it's a safe place to put money now. Trump's in there."
Really?
Yeah,
Really? The markets would go up from here?
well, I don't know if they'd go up from here, but I mean, I'm not.
What I'm saying, Greg, is where can interest rates go from here?
Oh,
Where
well,
can stocks go from here at 18, 20 times earnings, and the earnings are bogus?
well, I'm not cheerleading the market. I'm just saying that I'm not so sure that the rest of the world would look at it negatively if he arrested all these evil players that attempted a coup.
Uh,
I don't know.
yeah, but you have to understand a lot of the owners of the assets are part of, if you want to call it, the deep state. I mean, it was their game for how many, forever.
Wow. I don't know how this ends. And that's
Well,
what we're all doing.
I don't know how it ends, but I do know that it ends badly.
That's what you and Alan Greenspan are on the same page. He basically is. He is. He's out with a new thing.
Yeah,
Saying,
we're always on the same page. Always thought the same thing. Only, when he was chairman of the Federal Reserve, he couldn't tell the truth.
correct.
Simple as that.
Right now, he's out trying to do a mea culpa and warning everybody how bad this is going to end and what he keeps him up at night and all that. This is in a recent article. I mean, it just came out.
Right.
And he's out
and
there
that's just to protect his legacy. That's to try to rewrite, and basically at this point say, "I told you so."
Well, I mean, they all got on this train. Him and Bernanke and Yellen and now Jay Powell. Jay Powell's, I don't know what his deal is. I mean, you got the president saying he's our enemy, and Jay Powell's wrecking the economy. I mean, so I know Trump wants to be reelected. I think if he's reelected, I think I think we get the reset in 2021. But I don't know. What do I know? What do you think?
Well, the question is, can they get it that far down the road? I seriously doubt it. I mean, I'm shocked that we're even to where we are now without this system coming down.
Apparently, they're trying it, though. I mean, now the Goldman Sachs is out saying it looks like he gets reelected. Gerald Celente says, wow, Jay Powell's done a completely 180, and they're predicting that rates will go lower because they can lower rates than anybody else. Japan and Germany, Japan and Europe is at negative rates. Even
Hold on a second. There's a key word right there, negative rates. Really? What kind of, I mean, think about what negative rates means. That's like a snake eating its own tail.
It's terrible.
So you go to the bank and they pay you money?
No, you go to the bank and they take your money.
You go to borrow for a house and they pay you money to buy the house? Come on. In what real world is that even possible?
So you don't think it'll last? They'll. What is your prognosis? Well, hold on. Let me just back up. So obviously they're trying to stretch this out. That's what it looks like to me. So what's your idea? Can they do it? What do you think? What could go wrong? How about that?
What could go wrong? Anything and everything could go wrong. I'm not going to give you timing because we're way past the point of where this should have collapsed. And we're, like I said, there are no markets. The whole thing's a fairy tale.
What could go wrong though? What could actually go wrong? Could trip them up?
the biggest thing is there's too much debt in the system. Everybody owes everybody, and all you need is one link in the chain to break. All you need is one entity that can't make their, make good on whatever they promise. And I will say this: uh, if if we get to the point where the system's still together and these underfunded pensions start not paying what they're contracted to pay, then it's all over because you'll have revolution because then it affects the average person. At this point, nobody even cares because their lifestyle, yes, it's getting crunched down a little bit each year, but there's no big shock. But if all of a sudden you took a 60% hit on your pension plan or your pension plan completely collapsed, then you'll see the public go wild all over the world.
I just had a friend of mine who quit work at city government, 62. I'm taking my pension. Like, I have family members who don't read my site, think I'm crazy. They do. They think I'm absolutely. I don't want to talk. I don't know. I say I have smart people on. I mean, they're saying this is terrible. They're taking a a pension. I don't want to say who.
Hey, Greg,
But anyway,
death and taxes are guaranteed. Your pension is not. The only pension that's guaranteed, and I mean, I'm a firm believer of this, is if you have saved over the years in gold and silver, and you have that gold and silver out of the system. You can pick away at that for the rest of your life.
For people who are saying, "Wow, gold's getting hammered. It's down in the 1270s, and silver's under 15." What do you tell people? Are you worried? And what do you tell people?
I'm not worried at all. I mean, like I said earlier, gold and silver are monies that are no one else's liability in a world full of more liabilities than all liabilities combined in history. The whole system's going to come down. And if you've seen a house burn down, and I have, my house burned down in a wildfire back in 2011, the only thing left is the foundation. That's the only thing. The foundation doesn't burn. And that's what gold and silver are. And that's what's going to be left when this house of financial cards burns down.
Yeah, I like that. Your website, jsmindset.com, you and your business partner, Jim Sinclair, are running it. You have a subscription service. Jim comes on and talks. I love Jim Sinclair. Actually, I love both you guys. I would pay just to hear you at the end of the week go, okay, here's what I think happened this week. Like that 1.5 billion dumped on the market and all this other crazy stuff with the Italian gold. Tell me about that.
We have the site is kind of split in two. There's a public side and then there's a subscription side. I write a couple articles a week for subscribers. And then each Saturday we do about a 1 hour call. Jim, myself, our buddy Dave, and we just recently got a guy, real smart guy, and has been connected in the past with radio. So he understands the media, so to speak, and he acts as moderator. So it's a 1 hour round table, and that alone is worth it's $129 for the year. So basically, every week, you get 52 hours of, if you want to call it, seminar for $129.
Yeah. And the site, you also have free stuff on the site, which is lovely. I mean, you put up an article and you actually have some long commentary on the site. You put some of your articles on the site, and you also have short, very staccato commentary about things. The Italian gold thing, is that a big? Just before we close, the Italian gold thing, is that a big deal to you? Is that a them saying that's Italy's gold?
Well, the fact that they're fighting over it, yeah, it's a big thing. It should tell you, gold's more important than what they say. It's just a barbarous relic and nobody cares about it. It will be a really big thing if it turns out that the gold is already leased out and basically gone.
Mario Draghi will never be able to set foot in Italy again. He won't?
You're right. Yeah.
I mean, they're the number 3 holder of gold in the world, supposedly, allegedly. And then what about the Basel 3? I've been asking everybody about that. You think that's a big deal where they, they put this in 12 and then April 1st it became a 100% weighted asset that you can hold on the books? Is that a big deal? Does that show you where this is going, or is that not a big deal? I get a real split on this. Go ahead.
Yeah, it shows that gold is coming back into the system. They tried to demonetize it. It worked to some extent. Act of remonetizing it, because now you have banks are allowed to hold gold on their books and be credited 100%, as opposed to prior, if they bought $100 million worth of gold, they could only carry it on their books as 50 million. So there was a discount. In other words, they put up 100 million, but yet their balance sheet reflected only 50 million. So yeah, it's not a huge deal, but yeah, it's definitely helpful. And it shows that gold is coming back into the system. That's the direction we're going, not away from gold.
And with that, Bill Holter, thanks for joining us today on USAWatchdog.com. It's Bill Holter and his business partner, Jim Sinclair at JSMindset.com. Bill Holter, all the links for the JS Mindset, I put a link to the main site and also a link to your subscription page. It's $129 a year. Bill Holter, thank you for joining us today on USAWatchdog.com.
Thank you, Greg.